was established in 2018 to inform policymakers and the public about issues related to aerospace and security from an independent, non-partisan, future-centric, and analytical through a future-centric analytical lens. The center produces evidence-based research on air power, defense, and comprehensive security, in which economics plays a very important role. Today's webinar will focus on central bank independence, which has become an important issue in Pakistan's contemporary economic context. Globally, this subject has been debated at length, particularly after the global financial crisis in 2008. Following a 40-year trend towards greater CBI, some of the countries are considering the reduction of such autonomy, while in Pakistan, it's an external stipulation from IMF to increase the CBI. Therefore, it is important to understand the global evolution of CBI debate and assess both the merits and demerits across a wider canvas before contextualizing it in Pakistan's context and rendering judgments on its appropriateness for country's future economic trajectory. To inform our understanding of this complex issue at hand, we will be joined by eminent economists who share a profound understanding of CBI's nuances at this webinar hosted by CAS. Our first speaker today, Professor Paul Wachtel, who serves as a professor of economics at New York University Stern School of Business. Previously, Professor Paul has served as the chairperson of Economics Department, the Vice Dean for Program Development, Academic Director of Business and Political Economy, the chairperson of the University Faculty Council, and Research Associate at National Bureau of Economic Research. His research has been published in numerous journals, including most recently, Journal of Money, Credit and Banking, Journal of Finance, Economic Inquiry, Journal of Banking and Finance, and Comparative Economic Studies. Now, Professor Paul will share his insights with us on his rich global expertise on central bank independence. Thank you, sir.
Thank you very much. It's a pleasure to be here. I would love to visit Pakistan and have the opportunity post-COVID perhaps to continue these conversations in person. Let me share my screen as I go through a brief presentation which gives us a little bit of the background and the history of this term CBI, central bank independence, which I think will present the context for some of the discussions that are particularly relevant for Pakistan today. So, there we go. Okay. Now, central bank the central bank independence, CBI, is really one of the sacred truths of macroeconomics, a buzzword that everybody uses and everybody agrees to. But we have to step back just for a few minutes and ask ourselves first, were central banks always independent of government? And the answer is resoundingly no. So where did this idea come from? Well, the first mention I was able to find in my work of the term is in some things that Milton Friedman wrote just 60 years ago. The popularity of the term and of the concept really came together about the early 1990s due to a bunch of things going on at the same time, what I call the four forces, which I'll briefly mention in a few moments. So by the end of the 20th century, central bank independence was not subject to debate. Everybody knew how important it was. It was universally held amongst economists and the political sphere as well. But as it happens, when economists universally agree to something, the world presents some challenges. So as we enter the 21st century, there are crises, financial crisis a decade ago, the COVID crisis, which God willing, we're emerging from right now, which challenged the idea of central bank independence. So the question then is it still important? And why is it still important to both countries like the United States as well as Pakistan and every other country around the world? I will maintain that even in this very complex world that we're in now, it is still very important. Okay, what were the origins of central banks? Basically to be a bank for the government. We always think back to the Bank of Sweden, the Bank of England. In the 17th century, private banks operating as specifically the bank for the government, helping the government finance expenditures, and often given in return the right to issue banknotes, currency. The notion of a central bank doing anything else didn't really change until late in the 19th century, when the British economist Bagehot introduced the idea of the lender of last resort. The notion that a role of this central bank, so that term wasn't even in existence, the role of this government bank could be a special role to provide lending to private banks in trouble in order to maintain financial stability. So the first true central banking role was that financial stability role. The notion that the central bank was responsible for what we now call monetary policy, macroeconomic stability, is a recent development. Post-Depression, post-World War II, when Keynesian macroeconomics came into prominence and a central bank role in macro policy, it began to emerge. By the end of the 20th century, that role had concentrated on an emphasis on price stability, and the notion that the primary role of the central bank is to use monetary policy to maintain price stability. Now, how does that relate to central bank independence? Well, when Friedman introduced the term, I apologize for the sirens in the background. I live in the middle of Manhattan, and the noise never stops. Good, going away, even early in the morning. When Friedman introduced the term central bank independence, he said the objective of the monetary structure should be something that is both stable and free from irresponsible government.
नहीं हो रहा, उससे भी नहीं हो रहा. It's not recognizing the password, it's not recognizing the email. I don't know what it is. It's never happened. नहीं वो मैं दूसरे अकाउंट से कर रही हूँ आपको ना.
Sorry, Madam Shamshad, your speaker is on. आपकी audio on.
Okay. And when Friedman sort of expressed this term, he wanted a monetary structure that is both stable and free from irresponsible government tinkering. So that was the sort of first notion of central bank independence. And it became the most important idea in monetary policy and central banking, this sort of sacred truth that all economists agreed to by those four forces late in the 20th century. And let me just tell you what they are without going into them in great detail. First of all, towards the the end of the 20th century, many central banks which had been private including things like Bank of England, became public institutions, and becoming public institutions required some definition or charter defining their role. Many banks in the later part of the 20th century in formerly colonial countries. Pakistan, when Pakistan gained its independence, the state bank, which had been in existence, needed a law to sort of define its role in a modern state. In the 1990s, when 30 formerly Soviet countries became transition countries, they had to spin off various state banks and establish central banks. And so there was lots of law and constitution writing, which focused attention on this notion of the independence of the monetary authority. In addition, there were some important developments in macroeconomic modeling and theory. Primarily what we call the time inconsistency problem. And without going into it, anything, it's intuitively very clear. An opportunistic politician has an incentive to use monetary policy to expand the economy, increase employment, increase economic activity. That short-run gain will increase the politician's popularity and might very well assure the politician's re-election. The politician has that short-run incentive and doesn't have to worry about the longer-run, later inflationary consequences of what he or she might be doing. An importance of central bank independence is to solve this time inconsistency problem, which we call the political business cycle, which is understandable and inevitable. So as that became a prominent idea in macroeconomic modeling, it warranted more emphasis on central bank independence. Plus, later in the 20th century, some of the audience are probably too young to remember, inflation problems throughout the world, including in the most developed countries, with inflation rates in double digits year after year after year, made policymakers and the public very sensitive to what central banks could or could not do, and were losing confidence in government's ability to solve inflation problems and look to independent central bank structures as part of that solution. And finally, there was some empirical evidence around 1990, which went around the world measuring central bank independence, measuring characteristics of central banks and whether they were more or less independent. And that empirical evidence noticed that there's a correlation between the degree of independence and low inflation rates. In retrospect, as I look back at that empirical work, it wasn't great econometric work. The data weren't terribly reliable. The work wasn't all that great. But empirical research doesn't have to be Nobel Prize winning to be very influential. That empirical research was very influential. And here's an example. Along the horizontal axis, you have an index of central bank independence going from 0 to 5, the most independent central bank. And along the vertical axis, you have the average inflation rate over a long period of time. And clearly, countries with high inflation rates in the mid-late 20th century, Spain, New Zealand, and Italy, had less independent central banks than Switzerland, Germany, and the United States, with highly independent central banks. So by the turn of the 21st century, there was this consensus that you would have a hard time finding anybody taking issue with. that central bank independence is important because it insulates policymaking from politics. It protects against the temptation that governments have to have the central bank finance government expenditure by printing money. And it gives the central bank the ability to ignore criticism, maintain its policy objectives, and maintain monetary policy that's geared to price stability and the appropriate long-run objectives of the central bank. There was this idealized conception of the central bank being an independent institution with really only one role: price stability and the pursuit of price stability. Now, that was generally agreed to. As I said, you'd have a hard time finding anybody taking issue. But as I noted earlier, the world doesn't stop changing. As we enter the 21st century, there's one challenge after another in both emerging markets, developed countries, big countries, small countries, to this notion of central bank independence. Central banks all around the world jumped in the financial crisis to provide support for financial institutions, which was deemed necessary to maintain not only national financial stability, but global financial stability. The European Central Bank worked hand in hand with the EU. The Bank of England worked hand in hand with its government. The United States Treasury and the Federal Reserve System were cooperating in many, many efforts. This is not the time to go into them, but all of this was an appropriate response to the global financial crisis, but really threw up into the air this notion that central banks should do everything independently and at arm's length from the government. Well, the crisis passed, and a decade later, we're faced with the global COVID crisis. And once again, central banks jump in, cooperate with their governments to support businesses, to support households, and even take on actual government fiscal functions to provide that kind of support. Flies in the face of our idealized notion of central banks' independence. Also, in recent years, you hear discussions amongst responsible central bank leaders throughout the world suggesting that central banks ought to have some interest in global challenges like climate change, that they should be gearing their activities to some response to such global challenges. Once again, challenging the notion of central bank independence. Now, we shouldn't be completely surprised by this, because back in 1962, Friedman said, even when central banks have supposedly been fully independent, they have exercised their independence only so long as there's been no real conflict between them and the rest of the government. Essentially, the bottom line is the central bank is a public institution. So what does this mean for central bank independence today? After two once-in-a-lifetime crises in the last 20 years, or less, in the last 15 years, the world is complicated. Central banks are part of the public sector, and in a crisis, they will take on a broader role. Further, as Friedman told us 60 years ago, it is intolerable in a democracy to have so much power concentrated in a body free from any kind of direct, effective political control. It is a public institution. It has to be part of the democratic process. So even if central banks are not completely independent, that the reality is they are public institutions subject to public needs, they should have the appropriate governmental structures, the appropriate structures to run them so that they meet the appropriate public objectives. So sometimes I think that the term independence has been oversold. What we really need is to concentrate on is whether the central banks have the proper structure to do what they are there to do. And what do I mean by that? The central bank should have clearly stated policy goals and targets. Its policy actions with regard to monetary policy should be transparent, known to the public. They should be accountable. They should be reporting to public structures such as Congress or Parliament. And the structure of the central bank, the institutional structure, should be one that prevents the government from misusing this extremely powerful financial institution in a number of ways I'm sure you're all familiar with. By misusing the central bank, by financing deficits with direct sales of government debt to the central bank, printing money, basically, money creation. There should be structural rules, laws, which prohibit that from happening. By using the central bank to hide expenditures. We sometimes see that around the world. A government wants to do X, Y, or Z and not have anybody really know what they're doing. Have the central bank do it. Have the central bank finance something and enable a government to hide expenditures. That should be impossible in a proper governance structure. And finally, the central bank should be structured so that it is unable to direct credit to individuals or businesses or even activities chosen specifically by the government to allocate resources. Resource allocation of that sort is a governmental decision and the central bank should be immune or protected from having to enact government decisions of that sort. In order to have these preventions, not only does the central bank law have to codify them, that law has to be adhered to, and you have to have a central bank leadership that is secure in its role, confident of those protections, and able to concentrate on the activities of the appropriate activities for a central bank. So central bank independence has come a long way. The contemporary central bank, the 21st central bank, is a complex institution with multiple roles. And the crises have shown us that they often overlap with government and political responsibilities. So our understanding of central bank independence has to be more nuanced and complex than that idealized institution we had in mind 30 years ago, where the only thing to talk about was price stability and monetary policy and nothing else. Can't go back to that if that ever existed. But central bank independence means or refers to an appropriate governance structure, the laws and regulations that clearly define the role of the central bank, give it the ability to focus on price stability and financial stability without interference, and give it the legal, political role of protection and confidence in that protection to be independent of the misuse of central banks by the political structure, which is easy for government to think about, and those protections to prohibit it have to be strong, and everybody has to be confident in them. So central bank independence has come a full circle, but is still crucially important to maintain the proper role of a central bank. Thank you.
Thank you so much for sharing these valuable insights. Now we will go towards our second speaker, Dr. Shamshad Akhtar, who is an economist with a broad-based experience in a range of senior positions at national and multilateral organizations. Dr. Shamshad has served as a caretaker finance minister of Pakistan, holding multiple economic portfolios in the caretaker government, and the Governor State Bank of Pakistan as well. Moreover, she has served as the Under-Secretary General of the Economic and Social Commission of Pakistan and of Asia and Pacific, the UN Secretary General's Senior Special Advisor on Economics and Finance, the Vice President Middle East and North Africa at the World Bank, the Director General of Asian Development Bank, and the Special Senior Advisor to President of Asian Development Bank. Dr. Shamshad currently serves as the chairperson of Board of several institutions, including Pakistan Stock Exchange, Pakistan Institute of Corporate Governance, the Swiss Southern Gas Company, Karandaz, and Engro. I would now request Dr. Shamshad Akhtar to share her point of view with regards to the role of the State Bank of Pakistan in the context of Pakistan's economy. Thank you, ma'am.
Thank you, Mubashir, and thank you, Usman Saab, for inviting me and all the other colleagues who are and the panelists. It's really a very timely debate. Before I get into Pakistan context, it's important to recall what is the current environment in which we are operating. And as has been pointed out so graphically by Professor Paul, who we all have read, that these are unusual times in which we are. Traditionally, central banks, my recollection as a student was that they served as a conservative outfit, and it managed monetary policy to pursue their mandates with a strong focus on different types of monetary policy frameworks, in particular the monetary aggregates, or often anchored in terms of the foreign exchange regime. And then it had price stability, financial stability, and promotion and employment as some of the objectives. Now, of course, renewed debates have emerged on the role and functions of central banks that enter into newer ventures to respond to the global crisis. And I recall my days in Asia, where we were confronted with historic crises, but also the 2007 to 2008 financial crisis. And now we are in midst of COVID crisis. So basically, these debates have been pretty exciting on what should be really the role and functions of central bank. And a lot of them have entered into newer ventures from a conservative position to respond to global crisis, with advanced countries pumping in massive liquidity, while emerging markets adopted also a very reactive mode, recognizing their domestic imbalances were almost unsustainable. And they needed to do so because emerging markets are really global engine for great growth and trade. So you can't just get things fixed from the advanced countries' central banks or the fiscal firepower that they have. As you all may recall, in 2008, the global financial crisis prompted coordinated unconventional monetary policy action, which was marked by quantitative easing through asset purchase programs, and it brought to forefront the significance of the central banks in financial stability. I was affiliated with the G20, and most of our debates were not only international monetary coordination, but also international financial stability coordination. And if you recall, Financial Stability Forum was established at that point. More recently, in midst of 2020 pandemic crisis, central banks stepped in with unprecedented size, speed, and scale of reactive policies. And this time, what was different was, it was not just the advanced countries. Of course, advanced countries stepped in a big manner, but almost every country had to adopt reactive policies, including countries like Pakistan. And all of them have deployed multidimensional tools, core being the policy rate cuts, the forward guidance to ease aggregate demand, asset purchases to arrest dysfunctionality of markets, liquidity provisions, and credit support to support the businesses and employment, and regulatory easing, including reduction in counter-cyclical and other capital buffers, etc. This was all needed to reverse the sharp economic contraction while managing market volatility. And this has happened in almost all the IMF countries' membership, because IMF has recorded each country's responses very effectively. Magnitude and instruments of intervention have varied depending on the size of the economies, intensity of pandemics, and consequent lockdowns to arrest the spread. Unprecedented monetary expansion had to be, of course, coordinated with fiscal expansion, or the other way around, but it has helped global recovery and several countries' recovery, albeit at different speed. And one of the things that IMF has been talking about is the unevenness of the recovery and unevenness of the vaccine distribution, etc., etc. So, you know, if you read the very recent article that's come out in Project Syndicate from Mario Bleger, who I have admired his writings, he highlights, and I quote, "For the past few decades, central banks have been at the vanguard of a successful campaign to ward off recessions." This is what distinguishes now, even in the aftermath of major crises. But their huge role in propping up markets has had dangerous, unintended consequences that can no longer be ignored. And this is a part that we are in right now, the phase that we are in, that we are worrying about the unintended or intended consequences. As economists would say, we knew this would happen. So as recovery gained ground, which was very much needed, and the firepower was needed, expansion was needed of both the monetary and the fiscal side, but inflation risks have grown, and recognition that it is not transitory inflation, but the range and size of central bank tools deployed generated fairly complicated trade-offs. So now concerns have emerged on how do we go about fighting inflation. And this is critical to avert contagious expectations that can become very entrenched and is costly for public. We in Pakistan have already entered into these controversial debates between the sitting government and the opposition ranks, and public definitely is getting hurt in the process. Emerging markets and developing countries, which are clearly my professional interest, have also launched fairly aggressive counter-cyclical measure. Some have done so for the first time within their limited fiscal and monetary space for maneuverability. These measures, aided by multilateral institutions, massive rapid financing, which partly offset the revenue loss and expenditure financing for social safety nets that all countries had to provide for, and partly it helped, unfortunately, result in the loss of reserves, where the balance of payment crisis was acute in the countries where it was acute. While recovery emerged, the macroeconomic vulnerabilities of developing countries generated inflationary pressures in developing countries, reflecting both the pressures of domestic imbalances, disruptions, uptrend in international commodity prices, and so on and so forth, as global demand grew in response to global recovery. While most central banks have opted to tighten monetary policy, more so, I think, emerging markets obviously stepped in earlier. Pakistan has had off and on, going up and going down, but some central banks have lost their credibility in the process owing to their failure to anticipate inflation, their inability to lift interest rates on a timely basis in positive territory in real terms in the wake of political resistance and the supply shocks to the economy. And this brings me to the fundamental question of what has been deliberated by Professor Paul is really the central bank independence, and I'll touch upon in context of Pakistan. So by and large, all central banks have to do a lot of work to restore public confidence, and central banks have a very crucial role in this, but they have to be decisive rather than pursue gradualism, which could be costlier if inflation overshoots its target, but essentially it's one of the most lethal trends that needs to be arrested in country with a very high proportion of poverty as we have. And it is, inflation is really an indirect tax. In midst of all this, central banks, a lot of central banks are revisiting their frameworks. Case in point being the new monetary framework adopted by Fed of average inflation targeting, though there have been challenges in its implementation, others are seeking for effective coordination as the fiscal and monetary policy stimulus is scaled back in a calibrated manner. And of course, the normal refinancing facility and the new refinancing facilities that have been offered to provide sector support have to be eventually moved from the monetary accounts to sustainable fiscal policy channels, or we have to have an exit mechanism. Those who know Pakistan very well would understand this preface or the preview that I have tried to describe, which very much relates to some of the situation prevailing in Pakistan. No matter how complex it is, maintenance of expansionary policy will require every country to have monetary tightening to bring down inflation and scale back inflation expectations. I have had the distinct displeasure of fighting inflation in my country when I was serving my term as the governor and dealing with political noise, because people don't understand that central banks have to act when it is needed. There is no other platform which can do what central banks do. So in this context, let me jump right into the Central Bank of Pakistan. While we have had global recurring crisis, Pakistan has had its own recurring crisis. We have had boom and bust cycles. We operate with very high investment saving gap. We operate with very high fiscal deficits. We operate with very vulnerable balance of payment position. So we are driven by our own macroeconomic challenges, besides our being equipped to fight the inflation, the global inflation that is hitting our corridors as much as any other developing countries is. So while there has been much controversy about the Central Bank Act, I believe it was a very timely decision. And it includes good provisions. I do believe that the 1956 law had lived its life. It's worth acknowledging that there were 4 rounds of amendments in this law since 1956. And an attempt was made during my term by myself to introduce a new and modern legislation. And I also brought in a new legal, regulatory, and supervisory framework to bring under one fold the conglomerates, which are basically at the core is the bank, but they have spun off insurance, asset management, and other financial institutions. And I believe they were not being effectively supervised because our legal regulatory framework is fragmented between what is under the domain of the central bank, i.e. the banks, while non-bank financial institutions are under the security exchange companies. And anybody who has read the history of this fragmentation knows that this is not an advisable situation for any country. Regrettably, none of this has been addressed. And the law that we had prepared did not make its round for approval in Islamabad. And this was somewhere in 2007 and 2008. Now, so I am very pleased that in whatever form and body, the 2020 State Bank Act was finally approved by the Parliament, and with a very thin, well, I wouldn't call it a majority, but by one vote edge at the Senate, which is very disheartening to somebody like me, because this is a very substantive agenda of the law. And this is not the only law that has gone through this trauma, but there have been other laws too. So what is the fundamental good thing at the core? I think we have tried to streamline the objectives of the central bank legislation by defining at the core price stability, followed by financial stability. Now, in the third order, we have economic growth because we are a developing countries. But I do believe that we have, in every country, central bank does price stability and financial stability. So what do the rest of the ministries do? They put the blame on the central bank. It's their job also. And their primary responsibility should be to promote inclusive, sustainable growth rather than burden the central bank to do it, because there could be some dysfunctionality if you try to do too many, serve too many objectives. One other good thing about the central bank new law is that it has a very neat characterization of its functions, which were spread all over the law, and it gives one page of amendments which describe all the functions, ranging from its monetary policy functions to the banking sector and so on and so forth. Another very good thing which has come under some controversy is the recapitalization of the central bank. I do believe it would go a long way to strengthen the financial position of the central bank and its core at the heart of the independence of the central bank. By the way, any of these things that I'm talking about do reinforce and foster the central bank independence. But let me take a minute to talk about the significance of the financial strengthening. I think they are talking about rise in the paid-up capital, and to put in the law about a proportion of the profits of the central bank to really be invested back into the balance sheet of the central bank. And I think this is a very good step, because we are not in a static world, we are in a dynamic world, and central bank on its balance sheet has a lot of crappy schemes that would have to be funded eventually. Somebody has to take the burden off. Now, another element which is, I think, not a very good proposition. Every central bank has to have an effective coordination mechanism and a transparent mechanism between the central bank and the Ministry of Finance. As the saying always goes, central banks can be as independent as the Ministry of Finances allow them. And unfortunately, there is no parallel to the central bank independence in the scheme of things internationally of how to make Ministry of Finances also independent and subtract all the politics from the Ministry of Finance, because unless you have two entities at the same at par, then you can reinforce it better. And my biggest complaint when I was negotiating IMF loans was to the fund that be fair. You only ask the central bank to take the hard pill, to swallow a hard pill, but Ministry of Finance goes scot-free. We put in a reduction in deficit in the central bank, in the IMF programs. We put in a revenue targets, but every time IMF comes in, it revises its target. So one wonders what is a real target for IMF too. So it's compromised a lot, as I see. So what they have done in this coordination mechanism is to bring in something like what it calls a liaison arrangement between finance minister and state bank, which is not at all a satisfactory proposition, because anything that you want to give an independence and really want to stand on its feet, be it the MOF or the central bank, and to have a very open dialogue, you need to institutionalize the coordination mechanism. And there was a monetary and fiscal coordination board in the central bank. Ministry of Finance was there, monetary and fiscal coordination board, which was headed by the finance minister, then the prime minister. Unfortunately, it got very politicized and it was very dysfunctional. So the hardcore central bankers will tell you in Pakistan, good, you dismantle this. So no problem, you dismantled. But for God's sake, replace it with a decent architecture, institutional architecture. And unfortunately, that has not happened. So a central bank has to figure out a mechanism for monetary and fiscal coordination. And that is not easy architecture to develop, but it is fundamentally important to do so. So central bank independence needs to always accompany effective coordination and accountability backed by transparency. And in this area, regrettably, the State Bank Act's provisions are quite diffused in my view. So to strengthen transparency, there have been off and on clauses about how do you strengthen transparency. And some of them, unfortunately, are not adequate at all, to put it diplomatically, because to say the central bank will have an executive committee of the chief executive and the other high-level professional does not introduce transparency. It just improves the internal corporate governance and internal governance of the central bank legislation. So strengthening transparency would be quite key and will go a long way to provide confidence to the public so they know what is being targeted, what is in store. If we are targeting price stability, we need to know what our inflation target will be. Will it be a stable target? Will it be a medium-term target? Will it be a short-term target? Will it be a medium-term target? All this has to be spelled out and has to be taken forward. So State Bank needs to provide, because price stability is such a core objective of the central bank, we need to have clarity on central bank's position on price stability. It is defined as low and stable inflation, as it has been elucidated by the central bank and in the context of our discussion. But it needs to do more than that. It needs to disclose its approach and methodology for inflation management, and it has to remain focused on the delivery of the predefined target. And here I come that unless you specify your target, and it's like a target for 3 years or 5 years, whatever you opt to do, and you have to define whether you are doing flexible, average, light inflation targeting, or whatever you are doing, then you will be held accountable against it. So accountability vis-a-vis its targets is not there. And the coordination mechanism is very weak. So who will hold them accountable? It says that, well, we'll go with our annual reports to the legislature and other documents, and then we will have a financial stability annual document, and so on and so forth. But that's not what brings accountability, because these reports are pretty heavy reports to be swallowed by the parliamentarians, and Pakistani colleagues of mine would understand what I am saying about it. So what we need is an improvement in the institutional structure of the central bank. We need to navigate some of these targets in a very effective manner. We need to go beyond the central bank governor and the ministers of finance who don't have the time anywhere in any part of the world to coordinate. But it's really the staff that does a great job in coordination, from Ministry of Finance, from Ministry of Commerce, from whatever discipline we are in. So what we have to also fundamentally do is to increase the operational autonomy in line with the global practices on the central banking. So with the recently granted greater autonomy, we need to encapsulate accountability as well to the central bank, and it's kind of a missing variable in the equation of the independence. An environment of stable and low inflation is indeed best for the growth of the economy. So if you have growth as one of the third pillar of whatever you want to do, then you need to institute stable and low inflation and render yourself accountable to that. The government and state bank can come up with a better coordination mechanism that should not infringe on the functioning of either. But it has to, if you're adopting a flexible inflation targeting regime, which is what I gather from the central bank dialogue, instead of only inflation approach in a conventional inflation targeting, then we have to really have detailed equations and have to really work into that architecture in an integrated manner. Now, when the bills stand passed, State Bank has to engage, is now looking to engage with public more systematically and formally to present the views. Now, this is a gist of the message that came out in a dialogue I was involved in, while my position was, having worked in almost 40 countries, that when you take a legislation, you have to put it on your website and you have to let everybody comment on it. And then you have to grill the comments and drill the comments and weave them into the final passage of the legislation. This never happened because at least I never got the state bank legislation until it was passed by the parliament. So, I mean, that's how I would say is not a satisfactory approach. The law has to be put up on the website. And I mean, I remember my Indonesian days where I was Director General and a guy came to me, my staff, and said, well, I need money. I said, for what? For socialization of the parliamentarians. And those who are smart here would understand what that means, socialization. And I told my staff, get out of my room because the parliamentarians need to learn on taking these legislations seriously. So, I mean, this is on a lighter note. So, you know, I mean, I could go on about state banks' notification on the inflation range between the short term and the medium term, but you can find all that stuff. But one thing that I think that we need to put across to our public is that we have to safeguard ourselves from high inflation. And that is because we have a huge vulnerable population that does not have the purchasing power. It's, as I said, inflation is an indirect tax. It has harmful effects on industry. It stands in the way of sustainable development and growth. So the more State Bank works on the quality of how it has, what model it's going to adopt and how it's going to navigate, the better it could be. So let me get to the point on the accountability, which you will find clarity and alignment of the State Bank functions. Section 4C says that would facilitate accountability. Now, if you go back to that, you would know what I mean. Given in interest of time, I'll just point to you to some of the issues. Then there is insertion of section 9C, which says, which I love. It says no recourse to central bank borrowing by the government. That, I believe, is one of the most powerful provisions of the central bank legislation, because it would eliminate fiscal dominance of the monetary policy. It would induce more pressure to adopt fiscal sustainability backed by domestic resource mobilization, which needs to focus on raising tax GDP ratios. And we have to move towards market-based borrowing because we need to fix the yield curve and we have to lower our external debt also. So, there's this huge literature about coordination between fiscal sustainability and debt sustainability. And we are not there in coordinating that. In the same league, the discontinuation of State Bank's quasi-fiscal operations that range from export, industry, housing credit, to loan guarantees, etc. That's all going to be abolished. And there will be a refinancing transfer. I recognize I may be over on my time, so I'd like to just simply conclude by saying that central bank independence is critical, but it can't happen without fixing the fiscal dominance issue. And I think there are protective provisions for it. And if we could back it by a comprehensive and well-structured accountability and coordination mechanism, we have to fix the dysfunctionality of the monetary and fiscal coordination board. And of course, there are several ways of enhancing accountability and coordination, and surrounding it, look at central bank transparency, which, as I said, should not be just the own internal governance through a formation of executive committee, which every private company or public company has to do, but to actually integrate transparency in its codes. And there are several ways of doing it. I would not, in interest of time, dwell on it. The last point, I have to say that it would be prudent that central bank mandates pertaining to economic development are restructured and reformulated explicitly to be supportive of sustainable development and inclusive growth. And they should be supportive for low carbon and green transition or other environmental goals. Central banks have to choose between pursuing financial stability, because climate change is a financial stability risk. Of course, it has to service the low, typically 2 to 3% inflation. Without exception, they have to opt in favor of financial stability because there is nobody else looking after that. Thank you so much for inviting me. Sorry if I've run a bit over the time that you had allocated me. Thank you.
Thank you so much for sharing Pakistan's context and for sharing your valuable insights on this. Now, our third speaker, Professor Shahida Wizarat, who is the Dean of the College of Economics and Social Development and Head of the Department of Economics at the Institution of Business Management. Moreover, Professor Shahida serves as the Director of Research and Chief Editor of Pakistan Business Review. She has authored 3 books: The Rise and Fall of Industrial Productivity in Pakistan, Fighting Dependence, Proclaiming Sovereignty for an Enslaved Pakistan, and Fighting Imperialism and Liberating Pakistan. Besides this, she has published numerous research papers in international and national journals and newspapers. I would now request Professor Shahida Wizarat to highlight the importance of the SBP Act in the context of Pakistan's economic security and economic sovereignty. Thank you.
Thank you very much for inviting me. And I'm not the editor of the PBR anymore. I completed 5 years as editor, but now I'm the Dean of the College of Economics and Social Development. And can you please tell me how much time do I have?
As long as you want, madam.
Pardon?
As
How
long as
many
you
minutes?
like. But prescriptively 15 to 20. But as long
Okay,
as
fine.
you like.
Thank you. Thank you very much. Okay. Let me begin by saying that I find it very interesting that the state bank has been made so autonomous for a country like Pakistan, which still muddles through in a colonial mode. I mean, look at our policies. Our policies are still made abroad, and the people who implement these policies, by and large, those in high officials are selected from abroad, and yet the state bank has been made so autonomous. But I think the actual issue is not about autonomy of the state bank, but it looks like to me that the objectives are far more, they go far beyond just making the state bank autonomous. I think the whole idea is to control and manage Pakistan's economy and to stop it from pursuing its strategic goals and objectives, ensuring that the country continues to service its debts at the expense of growth and well-being of the population, and formulation of Pakistan's economic policies for the benefit of citizens in countries that control voting shares in the International Monetary Fund and the World Bank. The State Bank of Pakistan Amendment Bill is not about making the state bank autonomous, but making the government of Pakistan, but it's about making the governor's office very powerful and arrogating powers of the board to the governor, facilitating the transfer of Pakistan's state secrets to the IMF, onwards to India and USA, and through making him unaccountable to any institution in Pakistan. Now, let me first throw light on some of these things that I talked about. For example, if you look at what is happening to the government of Pakistan, it is being made subordinate. The State Bank Act is not about making the state bank autonomous, but making the government of Pakistan subservient, not only to the state bank, but to the IMF as well. And this is ensured through section 46B8, which states that the government has to consult the state bank for any legislation related with the state bank, who will convey its decision after consulting the IMF. And since 16.75% of the voting shares are controlled by the US, IMF shares are controlled by the US, therefore, the State Bank of Pakistan will get subordinated not only to the IMF, but to the US government as well. I mean, I think you can't call it autonomous. It would have been autonomous if it was not being subordinated to the IMF, but it is being subordinated to the IMF in a very, very powerful way, and through the IMF to the United States, or under the United States as well. And the government of Pakistan's powers are being eroded completely by removing the Federal Finance Secretary from the State Bank Board. But it's very interesting to note that the provinces are, I haven't heard about the provinces being removed from the board. Now, Section 44AB states that the bank shall request the federal government to remedy a deficit in the financial statement of the bank, and the federal government shall, within a period not exceeding 30 days, provide the said amount. Now, I don't know how the relationship can be so unidirectional that the federal government has to invest its money in the state bank whenever the state bank is in need of these funds, but the state bank is not going to be accommodating the federal government when it needs funds. So it is going to be a very asymmetrical relationship. Then if you look at the impact of this bill on the debt problem of the country, for example, the government of Pakistan cannot borrow from the State Bank of Pakistan because they say that this is against financial discipline. But if you look at what is happening in the State Bank at present, there is a lot of plundering of public money going on in the State Bank, especially after the influence of the IMF has increased. For example, the number of executive directors has increased from 4 to 18, with salary of their salaries are around 30 million per month, each person earning 30 million per month. Then the number of directors has increased from 14 to 30, with salaries of around 2 million per month per person, along with medical facilities, club membership, and other benefits. Annual salary raises are as high as 300,000 to 400,000 per year. Then further plundering of public money through declining leave preparatory to retirement and paying double salary for the last 6 months for no service to the bank. For example, if somebody who's earning 30 lakh rupees per month applies for leave, his boss is going to turn down the offer. So the person will have to serve for another 6 months and double the salary. For 60 lakh rupees per month, he is going to be made to stay on for this next 6 months. But obviously he'll be planning to go, so he will not be contributing anything, but he's going to be paid such a hefty amount. Now, I fail to understand how influence increased in the state bank, how these fantastic amounts started being paid to the state bank employees. Now, the new State Bank Act envisages no rollover of public debt by the government. This means that if the Federal Board of Revenue is unable to meet its revenue targets, Government of Pakistan will borrow money from commercial banks to pay its debts, which will increase the markup and the debt GDP ratio. And the debt GDP ratio is already 110%, which is much higher than the 60% allowed under the Fiscal Responsibility Law. So I think the State Bank Amendment Bill will increase Government of Pakistan's indebtedness very, very substantially. Then if you look at controlling the inflation or ensuring actually, you see, the thing is that the State Bank has tried to control inflation for the last 30 years through monetary tightening. And this has resulted in worsening the crisis as a result of decline in investments, output, and employment. By monetary tightening, I mean increasing the lending rate. And since increase in prices in Pakistan mostly come about when there is devaluation. And when devaluation comes about, there is increase in prices of oil, industrial raw material, and capital goods. Therefore, inflation in Pakistan is not due to demand pull factors, but it is due to cost push factors. But since the 1990s, the State Bank of Pakistan has been applying strategies which are appropriate when the type of inflation is demand pull. And I have pointed this out, I've been pointing this out since the 1990s, that we don't have demand pull inflation. Why is the state bank increasing the lending rate? Because it worsens the recession in Pakistan. And only recently I have understood why they are doing that. And it just clicked to me because you see what happens is that the state bank is making life very comfortable for citizens of countries which hold voting shares in the IMF and the World Bank. Now, these people will interested in their own countries. So I think the state bank is increasing the policy to control voting shares in the international financial institutions. You know, like countries which, Western rich countries, they have very low policy rates because they want to doing this facilitate them to earn substantial amounts from Pakistan's economy through portfolio investment. And portfolio investment is absolutely useless to us because it is of a short-term nature, so you cannot use it for financing long-term economic development needs. So I think now I have understood why the interest rate, Pakistan is the only country in the world where the lending rate is so high. And that is, I think, to facilitate rich investors from rich countries to earn, substantial monies through hijacking the interest rate in Pakistan. Now, I would also like to talk about demolishing Pakistani institutions and strategic objectives. For example, the State Bank forbids the government of Pakistan from providing guarantees for short-term relief to commercial banks facing financial distress, thus paving the way for the total collapse of Pakistan's financial sector. You see, there are countries, rich countries, which are bastions of free market. They have always aided and abetted their financial sector and their companies. I remember what happened in the aftermath of 2008 and 9 financial crisis, where trillions of dollars were injected in Freddie and Fannie and all these other financial banks and companies. But this act prohibits the government of Pakistan from coming to the aid of their banks and financial institutions. Now, my question is, where from will Pakistan meet its industrial, strategic, and defense needs and expenditures related with CPEC? Pakistan's greater integration with regional countries, especially since there is so much antagonism in the US to CPEC and Pakistan's integration to the region. Pakistani commercial banks collapse and replacement by foreign banks will create a vacuum for the supply of money for defense, strategic, and industrial needs. Governor State Bank's recent decision that export earnings accruing through land routes will not be counted as export earnings is just the beginning of what is to follow for rolling back of CPEC. Now, all the export earnings from the regional countries will accrue, these will come through the land route. And the State Bank governor has already given a ruling that these will not count as export earnings. So the idea is to discourage exporters to export and import from the region and from China. We are being told that state banks' autonomy will not have any consequences on making defense expenditures available to the army. But this is just the opposite of what is stated in the State Bank of SBP Act, which clearly states that the first priority will be debt servicing. And if after meeting debt servicing needs, money is available, then it will be made available for defense and development. And no money will be available because, like I said, the country is going to be increasing its debt GDP ratio because the government is going to be borrowing from commercial banks. And from commercial banks, the rate of interest is going to be very high. And if the rate of interest is high, then it will increase the indebtedness of the country. So after that, no money will be available for defense and development. Then section 46B states that the state bank can share confidential information with any international public and non-public authority and organization. This is very dangerous and jeopardizes Pakistan's security. Its tactical missile and nuclear programs, defense-related and other sensitive information will be at risk. Then, if you look at what has been done, I mean, that's why I'm saying it is not a question of making the state bank autonomous. It is a question of erogating more and more powers for the office of the governor. For example, Governor State Bank will be appointed by the President of Pakistan for a period of 5 years, which is extendable for another 5 years, instead of the present 3-year tenure. The salary of the governor will be as per the current market rate, which comes to 1 crore 30 lakh rupees per month plus benefits. And with benefits, this total package is expected to be around rupees 1 crore and 50 lakh. Major focus is on austerity. So it is very, I think you can see the double standards that the International Monetary Fund pursues with regard to expenditures in developing countries. I remember it was because of the International Monetary Fund's great emphasis on austerity that there was no development in the 1990s, and that is why I call the 1990s as the lost decade, because there were no expenditures on development projects, there were no expenditures on health and education and power sector and water development projects. That is why the 1990s is the lost decade, because all this was under pressure of the IMF to maintain austerity. But here, the IMF is quite comfortable with pushing this kind of a lucrative package. Likewise, there are 3 deputy governors. So if the governor is earning 1 crore 50 lakh rupees per month, then his deputies will at least be earning 1 crore rupees per month. And I find it very shocking that the cabinet approved such a hefty package for the governor and the deputy governors in about 5 minutes, while it is depriving pensioners, civil servants in KPK from the pensions. They are saying that they will not be paying pensions to civil servants in KPK because there is no money to pay pensions. So you can see the kind of duplicity and kind of contradiction that there is in their policies, that there is no money available for the people of Pakistan, but for outsiders who are coming here to pursue American interests, there is everything is available and nobody asks any questions. Then the State Bank Amendment Bill is misleading the people that the State Bank Amendment Bill is about autonomy of the State Bank. Actually, it is about erogating powers of the State Bank Board in the office of the governor. And this has been attempted through Section 9F, which envisages the constitution of an executive committee comprising of the governor and the deputy governors, making the State Bank Board null and void. The State Bank Board has become null and void because this committee has been brought, which is composed of the governor and the 3 deputy governors. This executive committee is not answerable to anyone. If the government wants to do any legislation concerning the State Bank, it has to take permission from this executive committee. According to Section 9G, the Monetary and Fiscal Policy Coordination Committee has been abolished. In its place, the governor and finance minister will maintain informal liaison. This informal liaison cannot be a replacement for the coordination committee in view of the tasks and responsibilities of the coordination committee that it is replacing. It is also an attempt to concentrate power in the office of the governor, State Bank of Pakistan. Further attempt to arrogate power in the office of the governor is Section 9(4), which states that Governor State Bank will be the chairman of the board. This entails conflict of interest and is against the directive of the State Bank governor himself to the president of commercial banks that they should not chair the bank's board. Now he tells presidents of banks that they should not be chairing their own boards, but here he is going to be chairing the State Bank board. The conflict of interest becomes obvious with incorporation of Section 14A, which states that the governor and deputy governors will determine the salaries and perks and privileges of the governors and the deputy governors. और तकल्लुफन ये होगा कि जिसका डिस्कस हो रहा है सैलरी वो बाहर चला जा रहा है, but it won't make any difference, because if the governor's salary and package is being discussed and approved and he leaves the meeting, but his own subordinates are there to take care of his interests. And if they don't, obviously they can get, the way things are in Pakistan, then I'm not sure how long they will continue. So this is a pure and simple conflict of interest. And I think you can't do these things in the countries from where these people come. But in Pakistan, they think that they can get away with everything, and they have got away with everything. Then let's look at performance evaluation and accountability. After giving such sweeping powers to the governor, state bank, including the power to fix his own salary and evaluate his own performance, it is but obvious that he will get corrupted. And therefore, Section 52A exempts the governor and the deputy governors, State Bank of Pakistan and the State Bank of Pakistan from laws of the country. Then the governor and the deputy governors cannot be challenged in any court if their actions are in good faith. This will encourage corruption, nepotism, and illegal actions. And it is very subjective. It is very difficult to determine whether the action was in good faith or in bad faith, because किसी के दिल का हाल तो किसी को नहीं पता है. So you don't know whether the person did something in good faith or bad faith. Now, in spite of drawing such a hefty package, no performance indicators have been mentioned to gauge the performance of the governor and the deputy governors. There is no accountability or penalty for non-performance. The governor and the deputy governors will not be responsible to the president, the prime minister, the cabinet, or the parliament. The Act specifically mentions that Section 39, the state bank will be responsibility. How can an organization be responsible? The head of that organization has to be made responsible to the parliament. Then if you look at the way the audit is going to be done, state bank audit has been converted into a farce through inclusion of Section 43(2), which states that the state bank board, which includes the governor, state bank, the state bank board, which includes the governor, will appoint the external auditor. And Section 4 states that the external auditor shall report to the audit committee and the state bank board, which includes the governor again, on key matters arising from the audit, and in particular on material weaknesses in internal controls relating to financial reporting. So the governor, state bank, will appoint the external auditor to conduct the audit, and the external auditor will do the audit and report it to the board, which is headed by the governor. This makes the whole audit dubious, as the governor, state bank, appoints the auditor to conduct audit and then to report to him. So by way of conclusion, let me conclude that the State Bank Amendment Act is not about autonomy of the state bank. Its main goals are to cut Pakistan to size and sabotage CPEC and regional integration, increase debts through borrowing from commercial banks at exorbitant rates, latter making it difficult to make resources available for defense and development, reduce Pakistan, China, and South-South trade, increase prosperity to rich countries' investors, put obstacles in nuclear and missile development programs. These are huge tasks for one single person to do. I mean, the United States has been trying to do this to Pakistan for so many years, but here is one person who's going to try to attempt to do all these. That is why his office has been made very powerful through arrogating the powers of the State Bank Board and the Executive Committee in the office of the governor. Since he and his team might be reporting on Pakistan's sensitive information to the IMF, and through the IMF to the USA and also India because of Gopinath, he and his team has been made unaccountable. That is why they are unaccountable, because they are going to be passing on sensitive information outside Pakistan to the IMF, and through the IMF to India and to the USA. Pakistani high officials are dependent on the same powers for extension of their contracts and award of their tenures. We are still, like I said, we are still living in a colonial mode. And therefore, Pakistan's top positions, appointments come from UK and USA. Therefore, these people are unable to play their role to protect Pakistan's interests. And therefore, I feel that the biggest security threat to Pakistan is the colonial mode in which we find ourselves almost 75 years after independence, entailing the formulation of our policies in the US, UK, and their implementation by those selected from the US and UK. At present, if you look at the constitution of the Pakistani cabinet, most are US and UK citizens. Plus, we have 22,380 foreign and dual nationals on very high positions who are bureaucrats. You can imagine why all this is happening and why we find ourselves in such a mess. Thank you very much.
Sorry for the delay. Thank you so much for your valuable insights. Now, to our last speaker, Dr. Usman Chohan, who is an international economist and an academic who serves as Director of Economic Affairs and National Development at CAS. He is among the top 10 business authors on the Social Science Research Network, which is the largest open repository of knowledge in the world. He has published 3 books in the past 3 years: Public Value and Budgeting, International Perspectives, Reimagining Public Managers, Delivering Public Value, and Public Value and the Digital Economy. In his 5th chapter of his 2nd book, Dr. Usman Chohan highlights central banks as public managers and how the central bank create value for public. Dr. Chohan's forthcoming book is titled Pandemics and the Public Value Management. Now, I would request Dr. Usman Chohan to share his insights using the lens of public value theory to provide propositions for the central bank independence. Thank you.
Thank you very much, Mubashir. First of all, President Cass, my esteemed colleagues and elders in New York, Karachi, Islamabad, and elsewhere, I'm very grateful for today's webinar. It has been extremely instructive, and I stand on the shoulders of giants. We have covered it from so many aspects that all I can do now is to offer a perspective, really. But we have already gained so much from the learned panel. So I begin. Is my screen visible at this time? Can you see my screen?
No, no, sir.
We did, but then it disappeared.
Yeah, it disappeared.
All right. How about now?
Yeah, it's back. It's back again.
All right. So I want to comment slightly on the structure of the webinar because I'm very satisfied with how it's progressed. We looked at the global context and how it's evolved over several decades, thanks to Professor Wachtel. We looked at the professional form of the SPP in a global context, as well as in the national context. Dr. Shamshad graced us with that knowledge. Professor Shahida has given important perspective on the sovereignty aspect of this, so in the political context as well as a national security context, and I'm just offering public value. So this will echo what has been said by Professor Wachtel, is that what is the gospel of this, and how is the conventional wisdom changing? I'll quickly touch on the Qaid's vision. So when we look back at the historicity of our institutions, it's good to look back at what the founding fathers said. What is the value proposition? This is sharing elements from my book and how they might apply. And then questions for reflection. I do not claim to be an authority on this subject, although I have studied it deeply. And so I would like the audience to reflect and arrive at their own positions. We've seen a variety of narratives that are all legitimate and all construct different lenses for us to study a deeply nuanced problem, as Professor Wachtel called it. So here are some quotes that I came across in the process of my research. So these aren't my words, and I would have put Professor Wachtel's work here, but we're lucky to have him in person. So it's important to notice that no single country has settled the question of how a modern central bank should be structured. No country. So to speak authoritatively by anybody, anywhere, is a little bit worrying for me, as it has been in the media. the pundits, or for example, in the political sphere. They speak a little bit too confidently about something that is really up for grabs anywhere. It's dependent on a local context and an indigenous evolution. So there is a relationship between government ideology and monetary policy, which is varied greatly because of structural changes in the global economic environment. This has been echoed by all of our speakers already. And it is subject to a great deal of variation over time. So it is difficult to set up a welfare function that allows the central bank to optimize various trade-offs, for example, economic dynamism and financial stability. The IMF has been accused. This echoes what Professor Wizarat said, ulterior motives. This is a cookie cutter recipe. Pakistan is not the first country that's faced this stipulation from the IMF. I will talk later about the baht crisis and how Thailand was asked to do this. Latin American countries. It's a cookie cutter recipe, but we are not Thailand, we are not Argentina, we are not Venezuela. Every country has a different context at a different time. And so keep in mind that making things independent has consequences. If you are in a democracy, people should be answerable to others. This is something that has been said by all of our speakers already. So in the Qaid speech, when he inaugurated the central bank, the State Bank of Pakistan, he said that it symbolizes the sovereignty of our state in the financial sphere. There's a very important comment to notice that there is the spirit of sovereignty exercised in financial domain was important. And the economic life of the country will be shaped by this institution. And the Qaid aspired that this would be one of our greatest national institutions that would play a part fully throughout the world. When I studied the problem, I made several propositions in my second book. They create value in two ambits. One is monetary policy, which is in a very abstract, because we have things like credit policy and all these other terminology, but monetary policy in the general sense of the word, or in the widest sense of the word, and then financial supervision. Citizens' values regarding employment, inflation, and other things can change, but the central bank is expected to address the values of citizens on these subjects. They enjoy far more independence in general than other agencies do. It's a general rule. That creates, offers benefits in the abstract, at least, because it's depoliticized, so it doesn't get hijacked by political considerations of each government and leads to political budget cycles and things like that. But there's certain challenges in terms of what is called the political administration dichotomy. They co-create value, but they may not necessarily respond directly to political or citizen exigencies because there is a distance that is created through their independence. So are they the ultimate arbiters of value? Keep in mind that when you set the price of money, many things in our lives are shaped by the price of them. And the price of money itself is shaped by the central bank. So the value of value, or the price of price for many things is determined. That's a philosophical point of this. And if you put it into two parts, the financial supervision is important. Microprudential, market integrity, macroprudential, so the system as a whole, and resolving risky situations, that's the financial supervision. But then in monetary policy, as all our speakers understand extremely well, but for the audience, there's interest rate, there's money supply, exchange rate, and other tools. And they have come into different use over different periods, and in crisis, things change. When we speak of independence, there's actually at least three different forms of it. There's a goal independence. So you set the goal, and then you're held accountable, then you can negotiate the goal. Then there's functional or operational independence. So you're given the goal, but you can choose the instruments to do it. This is the most common type. And then there's institutional independence, which is the question at hand. It's enshrined into law, it's protected, and there's no intrusion into it. So independence itself can mean many things. And so when we say we want to make it independent, that can mean several things. And I'm deliberately keeping my presentation short because we've drawn upon the wisdom of three eminent economists. So I want to raise important questions. So this slide is the crux. I don't have the answers. I just want to raise the questions. When we have independence here, why the SBP alone? In a well-functioning bureaucratic architecture of a society, you would have a culture where the experts get to do what they need to do, and then they're made accountable. Why the SBP now? I can think of hundreds of institutions in Pakistan that should be allowed to have at least the functional independence, if not the goal independence or the institutional independence. Why not your higher education commission? Why not your competition, etc.? There's so many. And why now? This is a particular time in the life of countries having gone through the pandemic, extraordinary measures have been taken. And we have done a very good job of getting through COVID. In terms of the normalcy index, I'll remind you that we've been in the top 3 countries. We're sitting next to New Zealand and Hong Kong, which are small island nations, and yet we're a big country surrounded by other big countries. So extraordinary times, extraordinary measures. Why now? Then the central bank, as was alluded to by the previous speakers, is part of a bureaucratic environment. It's a public body, it's a public sector organization. Coordination among the various arms of the bureaucracy is important to resolve goals. The SBP has in the past taken quasi-fiscal operations. And this is not just for Pakistan, other countries have adorned, especially in the pandemic, an almost fiscal role, depending on the country and the context. So why not do that? How would we have survived COVID-19 economically if we didn't have the extraordinary measures taken by the SBP? The state bank played a very positive role during COVID-19 here. It had counter-cyclical spending. It assisted certain industries, for example, construction. It changed the policy rate, etc. So it played a very positive role because it was aligned with the government. With changing laws and changing alignments, it may not be counted down in the future. Who knows? It really depends. And the law, the law has been very deconstructed in great detail by Professor Wizarat, Dr. Shamshad Akhtar. They've done an extremely detailed deconstruction, so I don't need to add. But there's one thing that struck me in particular, which is the close liaison. It's part of a system. So what kind of liaison? Are you going to message each other on WhatsApp? Are you going to post on each other's Facebook walls? What is the nature of the liaison? And that's just one concern. The others were already covered in extreme detail. And finally, the question is, why speak about a question that's so nuanced in such a aggravated manner? As Dr. Shamshad mentioned, it passed with only 1 vote in the Senate. It is on party lines, essentially. But keep in mind that no single country has settled the question of how a modern central bank should be structured. That is also at the crux of what Professor Wachtel said, that it is evolving. It is a question that is being considered from different angles in different societies. So when we say that this is how things must be done, that is very tricky. I urge, as a think tank, our responsibility is to raise the questions, not necessarily always offer the answers. And my task here is to ask us to think what would work given the complexity of the problem at hand. There are 2 sources that I recommend. I don't want to sell my own book. You could read mine, but there's 2 other books I think that are extremely relevant in addition to the literature produced by the eminent economists here. One is The Princes of the Yen, and it highlights exactly how the role of a central bank changing in a society can change the trajectory. Japan before 1989 and after 1989, the Bank of Japan, according to the author, who I was hoping would join us today, so I wouldn't have to say this, he would. The Bank of Japan was instrumental in that. And Japan has stagnated after that time. Previously, it was aligned and with the Ministry of Finance. It was under it. It was not independent in the way we would understand it. And they worked together implementing policies such as window guidance, and they would prop certain industries and pursue certain goals. So there's alignment. If your government has good intentions at heart and it wants to create value for the public, then coordination is a very good thing, and vice versa. And with the Baad crisis, just a reminder, these impositions were put on Thailand and other countries. Thailand wanted to refuse it, went to Tokyo for assistance. The Tokyo government was ready to bail them out, but then Washington said no and forced that IMF program. So there's a lot of this background. So what I'm saying is we're not a new country. There's not a new experience. We can draw upon the lessons of others. I think Japan is very instructive, but ASEAN countries too. And finally, the point is that map and the territory, which is a mea culpa of the former Fed chairman, Alan Greenspan, he says, I'm sorry. I had a map and it's a simplistic representation of the world, and the territory is very complicated. Monetary policy or just economic life is so complicated, so my rudimentary map could not grapple with it. Point being that central bankers are human beings and they're prone to errors and judgments, and they're also vulnerable to biases and ideology, just like we all are. And so we shouldn't count on central bankers to be omniscient, all-knowing, all-seeing wizards. They also have limitations. So that is an important counter-argument in that regard. So with this summary coverage, I thank you very much. Thank you. If our moderator isn't here, then are you?
connection issue. Yeah. So thank you so much for summing up the whole session in terms of explaining all these aspects through all different speakers. Now, basically, we'll move towards our question and answer session. So we do have some questions available right now. So our first question is from a researcher. That question is directed to Dr. Shahida, that there is a provision within the State Bank Amendment Act which grants immunity to the central bank from jurisdiction of NAB. To what extent can this provision be problematic?
Actually, you see, everybody who, I mean, if you hire somebody and you give them such a fantastic salary, I mean, you're supposed to evaluate their performance, and you're supposed to see whether they're working, I mean, whether the work they're doing is worth the value of the money that they're going to be drawing. But there is no such thing. And I personally feel that you never do that. You always evaluate people, and you always hold them accountable. So I personally feel the reason why these things have been left out is because Governor State Bank is going to be accountable to the IMF or the United States. So we will pay him such a fantastic amount, but he's not going to be accountable to us because he's been appointed by the United States or IMF, and he's going to be accountable to them. And you see, the thing is, the way I feel, if you look at this State Bank Amendment Bill, I mean, it is quite obvious that the State Bank governor is attempting to do a lot of things which are far beyond the autonomy of the State Bank. For example, he's totally doing all the things which, I mean, for example, United States and Western countries are not very happy with CPEC. And this is the first question that the first query and the first decision that he's taken, that all the export earnings coming from the land route are not going to be export earnings. So you can see that he's going to be taking steps to ensure that we follow the American line, whatever that is, whether it is in terms of abandoning CPEC or whether it is in terms of keeping our trade and relations with our former, countries with which we have trade relations, and not increasing our South-South trade, because South-South trade, most of it would come through the land route. So I think he's going to be working on an agenda which is far, far beyond the powers of the Governor State Bank. And that is why he is going to be doing a lot of things for which I think people of Pakistan would like to hold him accountable, especially that clause I told you about passing on sensitive information. I mean, I remember that I've forgotten the exact number of the, I think it is, but anyhow, I told you when I was discussing that there is a clause section which says that he can pass on sensitive information without being held accountable. So you can see it's right there in front of us. I mean, it's not, we're not making it up. It's right there in the State Bank of Pakistan Amendment Bill. So I think this is going to be very, very serious for Pakistan, because they've also said that they want all the defense entities to close their accounts in commercial banks and open them in the State Bank of Pakistan. So it's quite obvious that they are going to be doing surveillance of our defense related companies, and not only the IMF, but the Governor State Bank is going to be reporting to Gopinath, an Indian national, and then obviously United States. So I think US and India are both going to be looking at what Pakistan is doing about tactical missiles and about all the defense related and strategic expenses.
Thank you so much. Our next question is basically from a researcher from CAS, Mahin Shafiq. That question is basically directed to Dr. Usman. So the question is, in the end of the section, statements of objectives and reasons within the Act says that, Dr. Usman, are you there?
Yes, I am. Yes, I am.
Yeah. Sorry. So the question is basically, in the end of the section of statements of objects and reasons within the Act says that the Act takes into account the ground realities in Pakistan. But does this really take into account the ground realities?
I would actually like to hear my esteemed panelists' opinion on this. If you ask me, given our current conditions, given the exceptional circumstances of a post-COVID environment, and given the way that our economy is structured and the sort of deficits we face, I don't think that there's such a pressing need to do right now. And I don't know if it takes into account, as Professor Wizarat says, the realities and the conditions of our society, in my opinion.
All right. So we have one more question. That question is basically from our senior researcher, Madam Sitara Noor. The question is that it's not directed to anyone, so anyone on the panel can actually answer this. So the question is, while there are examples of such autonomy in the world, the problem with autonomy of the State Bank of Pakistan is of intent, suspicion of hidden agenda, incompetence, inability to reap the full benefits through the autonomy, or the method, the way it is done. So any of the panelists who would want to answer this, that would be great.
Actually, I haven't understood the question. Can you please repeat the question? What is the question?
Yeah, I'll repeat it again. While there are examples of such autonomy in the world, the problem with autonomy of the State Bank of Pakistan is of intent. Then they've got a bracket and saying suspicion of hidden agenda, incompetence, inability to reap the full benefits through autonomy, or the method, the way it's done.
Well, I personally feel that there is definitely a hidden agenda because if you compare the autonomy of the State Bank of Pakistan with other banks that belong to developing countries, then State Bank of Pakistan currently, without the amendment bill, it is almost as autonomous as many other banks in developing countries, and it is more autonomous than some of the other developing countries. So I think it is not a question of autonomy. And I think the timing is very, very, I feel that, and a lot of my colleagues also feel that, that we are being taken to a climax. For example, if you look at the situation in Pakistan, it looks like that the economic turmoil and the economic sort of, we are being taken towards a certain climax. And I think a lot of us feel that this climax might be happening in April or something. So I think that the timing, like Dr. Usman said, the timing is very important. And I think at this time, they want a state bank governor who is going to be, I think, toeing the US line. And I think that I feel very uncomfortable that Pakistan's assets and all the reserves are being controlled by somebody who's totally directed by the US and who's maybe a US citizen. I mean, this is a very, very I think it's a security risk kind of a situation, and I feel very uncomfortable. And it's a pity that most people in Pakistan, those on very high positions, they're only thinking of their own personal interests, and Pakistan interests are suffering because people are just very concerned about what happens to their own perks and privileges and positions.
Before you go ahead, Mubashir, I would like to, if you allow Professor Wachtel a question. Has this webinar helped to change your opinion or sway your view on the question? Is it anything different at the end of the seminar versus the beginning?
I'll add one thing, which I think is quite important, which came about with the governor's presentation as well, which is formal legal structures, as important as they are, only take you so far. What you also need is a institution which can convince the public and the political sphere that it is responsible and dedicated to both maintaining those formal legal structures and obtaining the goals specified, primarily price stability, in those formal legal structures. Independence can be very valuable, but if Dr. Wizarat's sort of view that an independent governor of the State Bank of Pakistan is in some way going to be controlled by the United States, a view which I find very puzzling. But if that view is widely held, there's not the confidence in the institution, and a lot of work has got to be done to build the confidence in the institution and the individuals so that there's wider support for the idea that it is following that legal mandate of stable prices and financial stability.
Thank you. So now I would request the Honorable President, Cass, to conclude this event with his closing remarks.
Thank you very much, Marshal. Right at the onset, let me first of all acknowledge the honorable panelists for a very, very insightful presentations and good questions and good answers. Dr. Paul, Dr. Shamshad Akhtar, former Governor of State Bank, Dr. Shahida, Professor and Dean at Institute of Business Management, and Dr. Chohan, Dr. Cass. So let me thank the honorable panel for sparing time to educate us and the other viewers on a very important subject under discussion in Pakistan. That is the Bill of State Banks Independence. The bill, as we all know, has been adopted by the Parliament as a mandatory condition for IMF for releasing tranche. The bill referred to as the autonomy of the State Bank of Pakistan is under discussion for various reasons. The pros and cons. While its supporters, that is mainly the IMF, argue that an independent, autonomous state bank is good to have to stay away from political decision-making and would have an disciplined regulatory functions. But those against say that the government must not lose its authority for financial management as and when, if there is a crisis, the bank would not simply follow government instructions. Example, Pakistan has handled the COVID-19 crisis very well, and State Bank had a role to play in supporting the government decisions. Similar crisis, if it happens subsequently, and there is a disconnect between the two, that is the government and the state bank, like Dr. Wizarat said, if the state bank governor is appointed from abroad and not to suit the Pakistan interest, but to suit the interest of IMF, yes, then there is as she points out, there is a security issue also. So therefore, this autonomy would not be answerable to the governor would not be answerable to any important pillar of the state, neither the federal government, nor the prime minister, nor the parliament. So, and how do we find out their performance? Only through crisis. That probably is late, as far the critics go. So therefore, it is an important question. And I'm happy that all our panelists have commented, and I'd like to mention some of the comments for concluding my presentation. Dr. Paul has given a brief history of everything, and the presentation that he gave was excellent. It talks about advantages, it talks about disadvantages of this. The obvious advantage pointed out by almost all speakers is the state bank would be able to better manage the inflation. But the disadvantages are the state bank will not give loans to the government. So therefore, government have to go to private banks. Private banks, that would mean higher rates, and that will have effect somewhere. So the as Dr. Wizarat said, the borrowing would increase the debt of the government of Pakistan. Dr. Shamshad was somewhat in favor of the amendment because she feels the earlier policies were old and we needed to refine things. And it is good that autonomy has been granted to the state bank. She favors market-based borrowing. Coming back to Dr. Wizarat's comments, is very clearly pointed out, it is not about the autonomy of the state bank. It is about empowering the governor who is not appointed by the government of Pakistan and by somebody else. So she says, when they make it is basically to make the government subservient to IMF and in turn to the United States. Therefore, is a security risk, as she says. And the next important point that I learned from her presentation is the asymmetric relationship. And she has another point to talk, land route exports, not counted in the exports running. Very significant. I think this is one subject that needs itself a webinar to what we're going to happen. The exports will go down. So therefore, she also pointed out the conflict of interest in the whole scenario. So what she says is it is actually empowering the governor, taking the power from the government, giving it to the board, where the governor also sits, apart from highlighting the issue of high salaries. Dr. Chohan has very clearly identified that no single country has so far settled about the question about the functioning of the bank. So there are issues. It varies from country to country. Very clear examples are, he gave example of Japan, that Japan in the earlier from after World War II till 1988 was not regulated through an independent central bank. Therefore, progress was phenomenal. But after that, see, the state bank is, or the central bank is independent. So they probably have reached a plateau in their development. A very good example to understand the scenario. Present time also, he says presently there are countries who have not accepted this condition of IMF. So I think today we had excellent discourse of various presentations, and we stand educated. I hope our audience have gathered collective wisdom on making how is it today. Does it suit the government of Pakistan or the nation of Pakistan, or it does not? I leave that to individuals from various arguments that speakers have concluded. Thank you very much once again, the entire panel and Dr. Usman's team for arranging this wonderful activity and the entire management at CAS. Thank you very much.
Thank you, sir. Lastly, I, on behalf of President CAS and the entire team, pay sincere gratitude to the distinguished guests, speakers, and respected audience for joining us for this webinar today. Thank you.
Thank you very much for inviting us.
Thank you, Doctor.
Thank you for including
Dr.
me.
Paul.
It was a pleasure to participate.
Thank you, everybody.
Thank you.
Thank you, and take care. Take care.